Glasgow is exuding confidence ahead of the Commonwealth Games next month, and it's rubbing off on the property market. But you can't deny the uncertainty around the Scottish independence vote in September. With that in mind, Estates Gazette took Question Time to Glasgow to tackle the big issues facing the city.
A recent article from the Estates Gazette showed that Scotland would be the biggest losers from the government's decision to postpone the 2015 revaluation. The question is, do you not think that instead of postponing the revaluation, more regular business rates revaluation would be a way to improve equity and fairness in the business rate system in Scotland?
There is a review which has been conducted about business rates, and no decisions have been made yet about what to do. We are very open to a reasoned argument about how we can use the business rate system to further grow the economy.
Including more frequent revaluations?
Well, as I say, I think in principle a quinquennial review is correct. Also, the revaluation system is hugely inefficient. There's lots of improvements that we need to make to the revaluation process so that it can be completed quicker and bring more certainty to the system.
Michael, do you love Fergus?
Yeah, I think the question from the floor was about the postponement of the valuation date. And you've got a tax that's based on the rental value of a property. The rental values go down. There's a revaluation due, and it just so happens that revaluation is postponed. So I think there'll be many businesses, rightly so, that will feel aggrieved by that.
It can't be annual, surely, can it? Or?
I don't think it could be annually, but maybe there's a system that's 2 or 3 years. I think I would agree that the appeal system does seem to process lots of administration, and I don't know how you improve that efficiently. But I think just to delay things when there's already a realisation that potentially some properties are overvalued is unfair in those businesses. That needs to be addressed.
Private sector funding also came under scrutiny, with claims that banks are itching to get back into property.
Which alternative innovative funding methods would you endorse as suitable to fill the gap left by banks? Bruce?
Well, our view is that banks are coming back hard into this, into the development funding.
Hard?
Yeah, hard, yeah. So William Newson was up, who's our head of valuation. He was doing a talk last week in Edinburgh, and he does a talk every year in terms of the health of the UK banking sector, and in particular lending into property. And William has identified, last year he identified 50 new lenders into the market. This year he's identified another 50. And his view is there's currently 100 lenders in the UK market who collectively have got 70 billion to lend.
Michael, does it feel to you that the banks are back in business?
No, but I think Bruce is right. I think as the markets will improve, they will come back in. I think that probably the difference and the frustrating thing for a lot of people is that the amount of money, whether it's coming from private or the public sector, is limited. And therefore, by default, I think it is the larger projects that have been successful in obtaining that funding.
But for the future of Scotland and the repercussions for inward investment, that independence issue looms large.
There has been an effect insofar as the Scottish regional market finally, in our view, reignited last year. As this year progressed, we always thought that there would be a pause. I think we hoped that it might last till the market would continue maybe to the end of June. But I think looking back on it with hindsight, I think the pause by institutional buyers probably started around about Easter.
We're used to working on a cross-border basis, as are our clients, with different jurisdictions on a day-to-day basis. And what we hear from our clients is exactly the uncertainty point, that what they'd like, both in their personal life and in their business life, is a little bit more clarity around some of the issues. And that's both from the Yes campaign and the No campaign, and particularly in a recent survey around taxes, around cross-border trade and around currency. Not a great surprise.
Certainly, there are opinions on what the government should be doing to encourage growth.
I think infrastructure and quite often you hear complaints about the planning system, connections to utility companies and so on. I think there's a whole raft of legislation, if you like, bureaucracy and hurdles that could be simplified, and just if it actually worked in the first place in terms of some things would help the system a lot.
regardless of what happens in September, for me, when we were looking at where to base our operation, the three most important things were the people and the access to talent, good quality accommodation in a city centre location, and the infrastructure to get people in. And those were the three biggest things in our criteria. So they'd be the same things we'd look for regardless of what happens in September.
I think the overarching strategy is to encourage growth. And we do that by supporting growth sectors and growth companies. It's not for us to pick winners, so we need to listen to industry very carefully, and we do that through industry leadership groups. For example, our oil and gas one wrote the strategy in 2012, essentially for us, which has now been copied by the UK government. And the potential for growth in oil and gas, Sir Ian Wood has identified as being an additional £200 billion over the next 20 years if the right policies are being pursued.
Overall, a positive picture for Glasgow, even if it is tricky to predict beyond September. Rebecca Kent reporting for EGTV.